Welcome back to another episode of Get the Guac. And joining me today, we have a special guest. It's Don Grauel, the owner of Goldsborough Independent Insurance Services. So let's get right into it. All right, so Don, welcome to the podcast. Thanks for coming in.
Finally on the guac.
That's right. We're getting the guac. So Goldsborough Independent Insurance Services, it's a business that's been around for 75 years. Over 75 years. I would like to say that you look really good for pushing 100.
Appreciate that.
Yeah.
No, I actually bought it from the corporate name's L.E. Goldsborough and Son. I bought it from the son, who unfortunately at the age of 94, March a year ago, passed away.
Yeah.
But he took it over from his father back in 1947.
And you didn't rebrand to Grauel. What went into that decision?
Conscious decision that sometimes it's good to be the president, sometimes it's good to be the employee.
Yes. That is a good call. So let's go into a little bit of your background. So prior to the insurance world, you went to the Citadel and you were in the Air Force.
I did.
You want to tell us a little bit about your career?
Well, the Citadel was just a good fit for me. I'm everything's got a space kind of person.
Yeah.
And I left there, went to the Air Force, and then flew for the Air Force for about 2 years. And that also was a good fit for me because they have checklists, and I'm a checklist guy. I love it. Yeah, and I got my notes ready to go, and I got to write them down.
Yeah.
So I'm a checklist guy, and that works great for me. I had no idea what I was going to do when I left the Air Force. A mentor of mine had sold his company to a company called Avemco up in Frederick, and they sold aviation insurance.
Okay.
Which was great because they had 4 company aircraft. And I was able to fly from the tip of Florida to the tip of Maine. I put more flying hours on in about, 18 months at Avemco than I did for all the time in the Air Force. So it was a great job.
So is that kind of your introduction into the insurance world?
Nobody gets insurance on purpose. It's by accident. There's probably
I am
3
shocked
people in the
to
whole.
hear that.
No, yeah, I bet you are. No,
You're probably born into it or find your way into it.
Yeah, there's a few strange people out there that become actuaries or insurance professionals, and they wanted to do that, went to school for it, if you can imagine that. A lot of us got in there by accident.
So I'm a little bit of a military buff. So I'm going to ask you kids that probably 12-year-old Joe would want to ask, but I'm going to ask them anyway as an adult or someone who pretends to be one from time to time. What plane were you flying when you were in the Air Force?
Most of my time back then, nobody will recognize it now, the T-38, which was the secondary trainer.
All right.
And I was an instructor pilot in that. We started in the T-37. Both of those were jets. Now the trainers are both prop aircraft.
Okay, so you had jet trainers, that was your primary. And what is the fastest speed that you have flown?
Just over the sound. They take us through the sound barrier just to show us what it's like, but you don't spend a whole lot of time there because it's really expensive.
Is it?
Oh, yeah. All you're doing is pouring raw fuel onto the fire.
Yeah. What is it like going faster than sound?
You know what? At the time, I was too nervous because you've got an instructor behind you making sure you don't screw things up.
Right.
I really don't remember it that well.
Okay.
That's the sad part, yeah.
Is there any opportunity to go faster than the speed of sound as a civilian, as like a tour or anything?
I'm not sure.
I don't know.
I've never looked into it.
What is the highest you have flown? How far from?
Let's see, what would that have been? Probably 35,000 or so.
And commercial flights are what, 40?
Can be, yeah.
Yeah.
So the aircraft are pressurized, but there's really no reason to play up there.
Yeah.
If you're going somewhere, you want to be up there.
That's wild. And last question, I know in the Air Force community, because you have told me, call signs are something of a little bit of a fraternity where it stays within the community. So I'm not going to ask you specifically what your call sign is, but knowing that you're in the insurance world now, I have a couple ideas. I just want you to shake your head yes or no if I'm correct.
All right, well, let me preface that by saying the other reason that some people don't share call signs is they come from an embarrassing moment.
Well, I would
and they don't
love
want to relive it.
To be shared on the podcast, but I know that probably won't happen. So was your call sign underwriter?
No.
No. Okay. Peril.
I like peril. That would have been good. Yeah, no.
No. All right. We'll give Jess the credit for that. And rider.
Rider's a good one, too.
Rider would be cool.
Yeah, that would have been all right. No.
All right. So
not
we're
even
0
close.
for 3.
Yeah.
Okay. We'll keep asking. We'll have you back on, and we'll just keep
there
going
you go.
through the list.
It's my ticket back.
So let's get into insurance.
Okay.
Really, there's I'm sure there's a million different ways you can chop it up. Let's talk about commercial, business-focused insurance, and then personal.
Okay.
Let's start with personal, because I think most people watching this podcast are probably individuals that don't own a business.
Have a home, have cars, yeah.
So what, in the personal insurance world, what are the trends? What are the topics that you're discussing with your clients now?
Well, probably the folks watching this podcast are fuming because they've gotten their homeowner's renewal or they've gotten their automobile renewal, and they just can't believe the numbers that are coming from these insurance companies.
Right.
And frankly, as an agent, sometimes I look at it and I scratch my head too. Where are these numbers coming from?
Right.
And not only is it a pricing issue, also it's an underwriting issue. So for the first time in 30-ish years, I'm telling people that, no, we don't want to market your account to another company. They might make you cut down that tree next to your house, which would have sounded crazy 5 years ago. Today, it's pretty common. So the underwriting is difficult, as well as the renewal premium. So all the days of no problem, Joe, we'll shop your account and we'll move you somewhere else are not gone, but it's much more difficult than it used to be.
The scope's getting a little bit more narrow. And
the scope's getting narrow. The
fewer.
Insurance companies are much more restrictive. They feel like they've got much more power than they did. And also, although we've seen the rate of increase come down, the rate of increase is flattened, we're still seeing increases. And some of that's cost of living. Some of it is the increased cost of construction for the homes. All the things that you've been reading in the paper obviously apply. And insurance lags a little bit behind the economy anyway.
Right. Now, let's say the average 60-year-old couple, they don't make any claims, they live a vanilla whatever, not taking outsized risks, and they see their homeowner's insurance and their car insurance premiums going up. How can we make that make sense to them? And not that we represent insurance. Mm-hmm. Like, we aren't the insurance companies that say we need to charge Mr. and Mrs.
Right.
Smith more money.
Right.
But what factors are going into that decision that is increasing these premiums?
Yeah. There's a few factors. We find a lot of times that, for example, on the home policies are based on the insured value of the home. And that's an important term, because a lot of times we find when we ask the client who comes to us, either they bought a new home or they're shopping their insurance, that value has nothing to do with what you sold for the property for or what you think it's worth. It's the cost of reconstructing the house. And that
it doesn't matter what your neighbor sold for a bidding war 2 years ago at the peak of COVID. It matters how much it costs to build it now.
Exactly. What's your real estate agent tell you about your new house? It's about location, location, location. Insurance has nothing to do with location. We're going to
construction.
Exactly right. So it has to do with rebuilding that house, like in kind, quality, and materials. So we look at that, what we call the coverage A, the insured value of the home. And a lot of the coverages are percentages of that main value.
Yeah.
So it's going to trickle on down through the rest of it.
So with that couple, what's the conversation they have with their insurance professional that's helping them? And what is something that they should kind of keep in the back of their mind? I don't want to say red flag, but like a warning flag that says maybe this isn't the best person looking out for me.
It's a pretty easy, even the clients who don't understand insurance, it's a pretty easy tell when it becomes, well, let me use this example. There's a certain insurance company on television that uses a price wand and they treat it like it's a can, and you can do that.
Yeah.
And there are agents out there that's kind of treated the same way. So you introduce yourself and they go, great, here's your price, right? I see your policy, here's your price.
Right.
Well, that's kind of that same thing. Yeah. And it is not a can of soup. It is not vanilla. There are a lot of things a lot of variables that can change in the coverage, in the insurance company. Probably one of the things that we get all the time when they get the renewal, the first words out of somebody's mouth is, why is this going up? I haven't had any claims.
Right.
Well, insurance is a vehicle for medical claims, construction costs, other bills. What's the other one I'm thinking of? Medical costs, lawyers' fees, right? The cost of suits. Well, which one of those is going down?
Yeah.
Right? So then, and again, insurance does lag, but it's going to catch up eventually. So just because you didn't have a loss, I'm sorry to say this, but insurance companies, and I can say this because it's my job to find you coverage. I don't make the pricing determination for the company.
You're the messenger.
I'm the messenger in a lot of cases, but our job is to go through all the weeds and figure out what fits your particular need. But the vast majority of these insurance companies could care less what your history was. I have 20 years worth of no losses. I don't care. What
Right.
did you do for me last year?
Yeah.
And that's what they're looking at.
Right.
And we are seeing, especially with commercial or personal umbrellas, we're seeing somebody who has a small property damage loss and may have had a $5 million personal umbrella. Insurance companies are knocking the limit of the umbrella down. Have never seen that in 20 some odd years. Just kind of shows you what's going on in the industry.
Yeah. So for folks that are watching this podcast and want to retire someday in the not too distant future, or maybe they're already retired, what are things that they can do with their insurance at that phase of life, going into and staying in retirement?
They need to be talking to their agent, maybe not on a quarterly basis, but once a year. Most good insurance agents will send out some type of pre-renewal mailer, email, something like that. And it's probably going to get to you as much as 3 months ahead of time, because most of those companies kick out renewals 45, 55, 65 days ahead of time.
Right.
So pay attention to that. Did you add anything to the house? Did you change drivers? Did you take in a relative to live with you? All of this has an impact. Very few factors don't have an impact in the rating today.
Right.
And knowing that ahead of time, the agent can work and try to figure it out, and in some cases move it to a company that fits you better.
Right.
Because that's part of the balance of being an independent agent, is that you've got the ability to put somebody where they belong rather than taking them and trying to plug them into that one peg.
Right. It's probably this push and pull of, if the unfortunate happens and you do have a claim, you want to make sure you have the right coverage, but right. Usually you just see the bill and you want it to be as low as possible. So
yeah.
Adequate coverage for losses that can and do happen, but balancing the value aspect of, is this the appropriate coverage? Am I getting a fair
right.
shake? Probably never going to feel like you get a great deal.
Well, and think of what's going on. They've commoditized insurance. The Geico ads, the Progressive ads, the Liberty Mutual ads. God, I hate those ads. Yeah. But they've commoditized it to the point where the average consumer just thinks it's nothing more than a number. Everything is the same, and it's about that number.
Right.
And so we'll get a lot of calls, and all they can think about is the price, and because that's all they understand. Price is always going to be important. I pay the same premium that you pay. I get to take my commission home, which is average 10 to 12%, depending, right? So I get to take my commission home, but otherwise I pay the same thing you do. They don't have that agent rate.
Right.
And
the secret sauce.
No, it's the same thing. And if so price is always going to be important, but you need to take that price and literally put it to the side for a minute. It's right here. It's important. We're not going to forget about it. But what else do we need to think about?
Within balance. That's not the only decision
Exactly
factor.
right.
Yeah.
Exactly right. So some things are important to others. For example, and more important than others. For example, water damage is the new fire. And there are insurance companies out there that are giving nice discounts for having a water flow meter that will automatically shut off.
Okay.
There's also companies that say, if you don't have one, we're not going to write your coverage.
Oh, man.
Or if you've got a sump in your house and you don't have a battery backup on it, we're not going to write your coverage.
As you're saying these things, I'm going through in my head what my utility area of the basement looks like.
There you go. There you go.
Yeah.
Well, and those are some things that homeowners can do. So if
right.
you're having that plumber come in to replace a line or fix something, ask. And it's like $250, $300 for the unit and for the installation. And it's a good thing.
One of my neighbors has one of those GPS trackers on his truck, and whatever company, I can't remember off the top of my head, give him a good driver discount, and they track his driving to make sure that the habits are within.
Yeah.
What's your take on those?
Mixed blessings. So it is a little comical when people say, I don't want people tracking where I go.
Right.
Well, if you got one of these in your pocket, guess what?
Yeah, they
right?
hear you, they know.
They hear you. It's you're not keeping anything from anybody unless you're completely off. So number one,
right.
they've already got that information, or somebody's got that information. So don't use that one. Some companies make it difficult. Some insurance companies, if you use their drive per mile coverage, then you have to also take all your invoices by email. Some people don't like that. You have to also sign up on their web page and follow them and do a bunch of different stuff. So yeah, a lot of these companies are trying to get
cute with it.
Getting a little cute with it, and that makes it that's a burden for some people.
Yeah.
But I think we're going in that direction. I don't think we're too far from the time when your phone's going to ping, and it's going to be from Goldsborough, and it's going to say, "Hey Joe, we found a better rate for you this month. Hit here to accept."
Yeah.
And it's going to probably work, and it's probably going to be work in tandem with some type of a user-based system, UBI system.
Okay. This might be like tinfoil hat or me being a curmudgeon, but I don't want one of the GPS trackers in my car.
Well, and today they're not really in your car. Today it's pretty much the phone.
Is it?
Yeah.
Oh my gosh.
But you still have responsibility. If I'm driving with you and you're a lousy driver, potentially it registers on my phone. So I need to erase it or explain it or do something.
So anytime that I would be driving my car, maybe a little over the speed limit, I would just say that my wife was driving.
That's a good idea.
Actually, but that would, same household, I'd probably just shoot myself.
Well,
in
that's
the
true
other
too.
foot.
Yes.
Yeah. Oh my goodness. Earlier you mentioned a couple of different names that people have brand recognition, the emu or what have you. I know in the financial world, advisors can actually be in different channels. What does that look like in the insurance world what are the options of working with an insurance professional? What are the structures that they operate within?
Okay. There's now 4, used to be 3 essential methods to be able to purchase insurance. One is the 800 number. So Geico, 1-800, you're with Geico.
Yes.
The other is the captive market. So State Farm and Allstate are the example of captive. So they're going to place you with whoever the captive is. And then there's independent agents. So we're an independent agent and broker.
Yes.
We have agency contracts with, in my case, 9 offices or 9 different carriers. And then we have brokerage arrangements with dozens of other carriers. So we can take that same account and put it in the place where it belongs versus trying to force it into that one peg. And
Right.
then-
You go to a hammer salesman, all of a sudden everything starts looking like nails.
like a nails, exactly.
You're going to
right.
need a hammer.
Right.
But-
and now we're starting to see some folks like GM, I think Tesla's now doing this, where you can buy the insurance as you buy the car. So that's going to be interesting to see how that pans out.
Direct through.
Yeah,
Tesla?
I'm not sure whether it's part of the car purchase or it's a separate. I'm sure it's a separate company,
Yeah.
but it's all part of the same program because they. And you were saying you didn't like being tracked. Well, guess what the Tesla does, right? So you don't need to carry a phone. The car knows exactly what you're doing. So it measures
Right.
all the hard stops, the late driving, the fast. Yeah.
Yeah. Oof.
No Teslas for Joe.
No Teslas. I'm just waiting for self-driving and then I don't have to worry about it.
Good answer.
Yeah. When you mentioned trying to fit a square peg in a round hole or
Yeah.
everything looks like a hammer, that really resonates with me because in our world, you have captive agents. You have 1-800, the robo-advisors, the do-it-yourselfers. You have different employee channels where
Right.
maybe a bank or a Wall Street firm that people would recognize. And then you have the independents, which is the space that we fill in, so I can appreciate what the independence means because it doesn't matter what company we use as long as it's quality and it's best for the client, then we use it.
Right.
That would be difficult to be a captive agent if, say, I don't want to name a name because I'm not sure which ones are doing this, but some huge unexpected rate hike comes out and now you have to apologize and try to navigate through, but there's no other options to shop around. It just is what it is from that agent standpoint.
Yeah.
Did you ever feel in that, or you've been independent the whole way?
I've always been independent. A lot of friends who are captive and they've been through that, or and I won't mention the company name, but a company who left a state and they're getting phone calls now about, well, how do I know it's not going to happen to me?
Right.
And if you've got a clean driving record and you've had no claims on your house and you've got a new roof and you've got the water line, great, easy to move you. But if you've had a claim or two, it's going to be very difficult to move you. So they face those issues fairly frequently.
What is, for a homeowner, how often, on average, like industry average, do people make a claim? And what is the average claim amount?
The independence comes into play here because the average claim amount for us is going to be much higher than a lot of shops. So we are independent. Yes, we've got agency agreements, but I'm not required to tell the carrier the discussion I have with my client Joe. So Joe calls me and says, I had this fender bender. I ran into a pole and I did $4,000 worth of damage to my car. So my discussion is going to start with, well, Joe, you've got a $1,500, $1,000 deductible, whatever we have on that car.
Right.
You did $2,000 worth of damage. So they're going to write you a check for $1,000. And next year, they're probably going to get that back because you're either going to lose the loss-free discount.
Yeah.
So the companies love this. We don't surcharge you. No, but you lose your loss-free discount, so your price still goes up. I don't care what you call it. There's still more money out of your pocket, right?
Right.
So our discussion is very different. And we'll have the discussion with Joe about, is this really something you want to turn in? Now, there's circumstances where we would turn it in anyway. You didn't hit a pole when it was just you in the car. You hit somebody else's car with them in it. That's a different scenario.
Right.
But there are situations where it might make sense for you to pay that claim out of pocket. Nobody knows anything and your record stays clean.
So you can be a proactive advocate for your client to make sure that they're getting the very best and looking at all the things that they don't know. Because let's face it, you may be shocked to hear this, but I think most people don't walk around reading policy statements and researching.
Excuse me?
That's what I hear. I mean, I do. I was looking at my
Well, I know
policy
you
before
do.
I walked in. But
Yeah, I thought I saw that. You were sort of drinking a beer and just looking over your policy.
yeah, I think at the end of the day, people just want help. Yeah. And, look, I'm a doctor or an electrician or this is my specialty. Your world, I don't know. Can you talk to me like I'm a third grader in normal people words and just tell me what I'm supposed to do? Or what would you do if you were me? I think that is the most powerful question that people can ask those that they're getting advice from.
What would you do if you were me? What would you do for your mother?
Yeah.
Is the other one. And then a lot of times it is about that leadership. It's not necessarily telling you what to do. It's the leadership and saying, Joe, here's the 15 options. Here's the 2 that I think make sense.
Right.
And if we want to talk about why, I'll go into why. But here's the 2 that probably make sense. Here's reason 1, 2, or 3.
Yeah. I think we've all been to folks that we're looking for some guidance and advice from, or we were talking earlier, in a medical setting, and it is buzzword, buzzword, buzzword. And I barely know knee bones connected to the leg bone. So I always tell the doctor, I'm like, you just talk to me like I'm a third grader. What does this mean, and what do we do about it? And they're like, and then they refocus. I wish there was more of that.
Oh, absolutely. And maybe it's just the insurance industry, but I feel like there's too many people that want to show you how smart they are.
Yes.
And they'll drop words that they use every day, and by the time they get through the sentence, it makes no sense to the average individual.
You've added no value.
Zero. And we say that all the time in our shop. If the client comes through here and all they got out of us was a policy and we didn't add value,
Right.
They don't need us. And we're in for either a very quick and violent death or a slow and painful death.
That's right. You have not moved the needle.
Right.
Now, personal insurance coverage is a part of your practice, but another big part of the practice is the commercial business. Mm-hmm. What are the hot topics in the insurance community for the business world?
So about 65% of what we do is business, and we're small business. So we've got a couple accounts that pay us over $150,000 or so, but the vast majority of our accounts are in that 50 and below thousand range. So they've got 25, 30 employees, that kind of thing.
Right.
So my answer is with the Main Street type business in mind.
Right.
Because some of these coverages don't sound like what a lot of Main Street people would talk about. There's 2 that come to mind. One of them is cyber liability. Mm-hmm. Nobody has been to a cocktail party and not heard a horror story about somebody's business getting hit or a personal bank account getting hit.
Yeah.
And the other is employment practices liability. And employment practices liability is the failure to hire, failure to promote, too fat, too thin, too bald, too hairy, too whatever it is.
Yeah.
You didn't hire Don because he didn't know his job. You hired him because fill in the blank.
Yes.
And once you fire me, I'm going to make sure that I tell somebody about that.
Right.
And we're seeing that frequently. And we see it a lot when there's a change in ownership. We see it a lot when there's layoffs, obviously. We see it a lot when leadership has changed.
Right.
And we see it day to day. just people that were let go for whatever reason or weren't promoted or whatever the case might be. Those are expensive claims, average about $25,000, 8 to 10 to the person to make it go away, and 15 or 8 to 10 to 15 to the attorneys.
Yeah.
And that's good coverage. Cyber, similar type of thing. If you've got a claim, you want somebody to help. And there are professionals that know how to tie these things up, know how to talk to the FBI and to the police to go get your money back, know where all these crypto banks in countries you never heard the name of are located and how to get to them.
Right.
So you want somebody to be able to do that. So you're buying the protection, but you're almost buying the ability to get some of that stuff back.
Right, because I'm sure the business owner, the last thing they want to spend time doing when they're running their plumbing business with a dozen employees and however many trucks, hey, let's take 100 hours over the next couple of weeks and do some forensic accounting and navigate.
Right.
So with these coverages, you have somebody helping you with the process and familiar. Yeah.
And that same plumber probably has no idea that you've got a legal requirement to report it.
Right.
You've got to turn it in certain places. If you have certain licenses, you've got to turn that information to other places.
Right.
You've got requirements of whether you're going to give folks free access to privacy and locking down their business accounts and their bank accounts. It's complicated.
Yeah.
The last thing I'll say about that, where I was going, was that there are a lot of people that will put the coverage as a bolt-on to their business policy. Mm-hmm. So there's the homeowner's policy we were just talking about is both your contents in your house as well as your liability. Somebody slips and falls on your property type of thing. Well, we have the same thing in small business. It's called a business owner's policy. So it's your property, it's your inventory, and it's the liability that goes along with it, whether it's somebody slipping on the premises or somebody swallowing something that they shouldn't have swallowed for your product. A lot of times you'll see these products that are bolted on to those coverages. Right. 9 times out of 10, that's almost worthless. Yeah. Those are CYA for the insurance company, not coverage for you. So a lot of times,
accidental death and dismemberment kind of like the equivalent of what you're talking about?
Yeah, and there's some value there, but I see where you're going. It's a similar type of a thing. Yes.
I once worked with a client who got these mailers that, hey, free $1,000 life insurance.
Oh, yeah.
AD&D. And I'm not kidding you. They brought in a cardboard box and dumped it onto the table, and it was envelopes. And he's like, I'm pretty sure I have all these policies. We went through each one with them, and that's definitely going above and beyond.
Yeah.
And some of them, but the provisions were, you have to die in a commercial aircraft. And you have to, it was like so specific. You get $50 to lose a thumb, but $1,000 if you're dead on a commercial flight. It might be $2,000.
And at least that if you buy an AD&D policy in the airport, and we're out in the weeds here, but it's a good point to make. If you buy an AD&D policy at a kiosk in the airport, it's probably going to say you got to die on the airplane.
Yeah.
But on the insurance policies, on a business insurance policy, we'll get somebody that calls and says, well, I've got $25,000 worth of employment practices on my policy, so I don't need to talk to you about any higher limit.
Yeah.
Well, the coverage that goes behind that limit is next to nothing.
Right.
Very few perils is what we call them. Very few perils are covered there. And then secondly, think about how does an insurance company not pay a claim? Well, they show you what words don't apply. So I can talk about a comma or a word, how that coverage doesn't apply. But once I give you the limit and say you've got coverage, I've solved the problem. Okay, you've got the coverage, $25,000. I'm done.
Right.
Well, my claim is for $350,000.
Right.
Here's your $25,000.
It's like having a car in the driveway, but it never has gas in it. What's the point? It's not taking you anywhere. It's not helping.
Yeah. So it's not a tick off on a list. And we do see that with small businesses. And it makes sense when you think about it, right? So Johnny's driving down the road on his way to his business, and he hears the Geico commercial, 15% in 15 minutes. And he's thinking,
right.
Well, I've got a boat, I've got a couple houses, kids have cars, I'm paying $10,000 a year for personal insurance. My business doesn't pay a whole lot more than that. Well, it must be the same thing. It must just be a 15-minute conversation.
Right.
Probably not.
I think despite media, the doom and gloom gets way more airplay.
Oh, yeah.
But personally, people run around and generally avoid what could go wrong. It's not as pleasant as, say, planning for retirement, the vacation with the grandkids, and the once in a, so it's a little bit of an uphill battle.
Right. So
I would imagine people aren't motivated to get out of bed and be like, I need to make sure that when this thing, if it ever happens, I'm good. But I'm sure, and we won't go into all of them, but you've got story after story after story of people that just kind of brush it under the rug and then regretted it.
You do, and you try not to remind them of that, right? So we have had
What's
that.
done is done.
What's done is done, and we have had that call where we'll say, "You really don't want a $10,000 deductible." Yes, I do. Yes, I do. You really, really don't. Yes, I do. Yes, I do. Okay, and they have the claim, and then you're all of a sudden reminding them, "Oh, we did that. Oh, that's painful." So
Yeah.
you've got some of those, but you're right. Most people, that's not the way they think. They're thinking more of the consumption and the happy part versus of the protection piece, right?
Protection of what could go wrong, or do I focus time and energy on all the things that could go right?
Right.
Some mix of both is really what's going to happen.
And it's actually getting a little bit easier in my practice, probably like yours. Most clients are 10 years either side of your age, right? If you take most of them, they're going to be 10 years younger to 10 years older.
We're
maybe
getting
a little
there.
bit. Yeah. Well, I'm there.
Yeah.
So I've got some at 62. I've got them 52 up to 72.
Yeah.
The interesting thing about some of the older folks is I've started saying to them, how much money in the event of a bad thing happening do you want to come out of your bucket versus the insurance company bucket? And that seems to give them a visual.
That's a great way to put it. And I like buckets.
And you like buckets, and I love buckets.
That makes sense to me.
Everything goes in its bucket. So it makes perfect sense to them, and then we can start to have a discussion about what makes sense.
Right.
And for a lot of people, higher umbrella limits make sense because it's protecting that bucket of money.
Don, we've coordinated on several clients over the time. What do you think works best for the client on how a financial advisor and the insurance advisor coordinate for the benefit of the client?
Great question, because we don't see anywhere near enough coordination.
Yeah.
And it doesn't necessarily mean that either the P&C, property and casualty agent, needs to be sitting in on that discussion or the other way around. But it does mean that a short conversation between the two, 5, 10, 15 minutes, might make some sense.
Right.
What we found a lot of times is that when a financial planner goes through a fact finder in whatever form they use, there's a section about the property and casualty, your home insurance, your auto insurance, your umbrella insurance, your boat insurance, blah, blah, blah. Mm-hmm. And a lot of financial planners, because they don't understand it or because they don't have a relationship, probably rightfully take it and just pull it out and don't even mention it to them.
Right.
And if they do say something, they'll say, have you checked your rates? Have you shopped your insurance? Do you have an umbrella? And does your umbrella have an uninsured motorist?
Right.
Is that pretty accurate?
Yeah.
Okay. And those are all important questions. There's
Right.
more to ask, and there's more detail there.
Right.
But it rarely happens. And then from the financial planner's point, a lot of independent agents who are selling the home and auto go right into the life insurance.
Right.
My personal view is that the financial planners should be dovetailing the financial products, the long-term care, the life insurance, that type of thing.
Right.
So I don't think there's enough coordination going on there between the financial planner and the property and casualty agent. The property and casualty agent should be part of the financial plan, and he or she should be the protection piece of that.
Right. So, it's funny. Folks that have enough money to retire generally have a team. Accountant helping with the
Isn't that funny?
taxes.
Yeah.
The attorney drafting the wills.
Yeah.
Probably put them in a trust that maybe they need. Maybe.
Yeah, true.
And then the financial advisor coordinating the investment piece. The fourth leg of that stool, you're saying, is the insurance advisor. It's the making sure all those 4 team members are at least coordinating, not having like a quarterly phone call, but everything is well covered and reviewed.
And making sure that all those individuals have the same mindset as the client.
Right.
Right? So if the client wants $10,000 deductibles, is that what everybody's thinking?
Right.
But if I'm that belt and suspenders kind of guy, because I'm an insurance agent, never be too sure,
Right.
is that what my client is? And I need to take my baggage and stick it to the side for a minute, make sure that we're taking care of the client. And the other folks on the team need to think similarly.
Right. A lot of value to have a team of pros constantly advocating for your benefit.
Right. And even for when there's fees involved, and there's not in the property and casualty area for individuals, there's not a fee involved. I mean, the high-end 300-foot yacht people, different story.
Yeah.
But for the vast majority of us, there's no fee involved for a property and casualty agent. They get their funds as commission from the insurance company. And again, it's 10 to 12% or so.
So if you go direct, I'm sure that there's compensation that is built into to those models that the insurance company keeps. And in the independent world, you're going to pay the same price. Do you want somebody helping you with it, or there's different one-offs in every situation, but generally that's kind of the theme.
True. And when you think about it, my services are free. I'm going to tell you what you need to protect your home, your auto, your life in terms of life assets, and I'm not going to charge you a cent. 10 minutes later, you can hang up the phone or walk away from the meeting and do whatever you feel like.
Right.
So there's value in making sure you've got that point of view.
The guidance and experience.
Yep.
All right, so let's jump into a quick lightning round before we wrap things up.
Okay.
Rapid fire questions, quick
Go.
answers. First
Go.
thing that comes to your mind.
Okay.
Most underrated type of insurance.
Umbrella.
That's a great answer. I'm slowing down the lightning round. All right. One coverage everyone forgets but shouldn't.
Schedules, jewelry, inland marine schedules, your wife's diamond, the silver set you inherited, that type of thing.
All right. Do people still have like rubies and gems hanging around, or is that
They
starting
do.
to...
They do. We don't have much of a market for the Hummel
And
collection
what are
anymore.
their addresses and times of
Yeah,
schedule?
yeah,
No, I'm
yeah.
kidding. One piece of insurance advice you'd give in under 10 seconds.
One piece of insurance advice I'd give in under 10 seconds. It's not about what you paid for the house.
That's a good one. And finally, what is your favorite insurance mascot?
Is that a real question? I am so teed off at these companies that treat it like a can of soup.
Yeah.
I get almost physically ill when I see the Liberty Mutual and I represent Liberty Mutual.
Right.
And I almost get physically ill when I see that. That's just absolutely obnoxious. And I think my brain cells are slowly dying on pretty much every one of them. Now, having said that, Progressive's got some pretty funny ones.
Okay, great. Don, how, if we're interested in learning more about your services, where do we go to find you? How do we contact you?
Well, what you don't know is that I am neither the brains nor the face of the operation. I've got some pretty smart people at the office, and sometimes I get to do stuff like this, so it takes me out of the office. Goldsborough.com. The phone number at the office, 410-377-2111. That's the text to the entire staff and the phone line.
Okay.
And if you give us your name and the phone number on that text, we'll call you back. The right person will call you back.
That's awesome. Thank you so much for coming in. This was great.
It's
Really
fabulous.
enjoyed having
Thanks
you.
so much.